logistics companies are gearing up for higher export demand as Singapore upgrades its trade forecasts for the third time this year. Non-oil domestic exports are projected to grow by 7 to 8% on year. That's up from the previous 1 to 3% forecast. Lisha Rodney reports.
Legend Logistics was navigating choppy waters amid the pandemic, battered by a manpower crunch. So the company ramped up the digitalization of its operations. It improved the firm's processes and services, boosting efficiency and productivity.
What you used to have 3 people doing the job is streamlined, and the normal routine work processes that take out some of the manual input, so that data is collected, there's visibility, reports are generated, and less time taken to do the same manual tasks.
The company has positioned itself to ride the wave of rising international demand. There's momentum coming from the strong second quarter export growth from sectors like petrochemicals and electronics.
There's still a lot of pent-up demand in the major economies for electronics products. China continues to ramp up on technology products, as well as I think demand in the US remains relatively high. So that means that I think electronic exports to the rest of Asia, I think could look relatively strong as Singapore remains a critical supplier in the supply chain.
Non-oil domestic exports grew by 10.1% on year in the second quarter, extending the previous quarter's rise. China, Hong Kong and Taiwan were the top markets contributing to Singapore's NODX growth. However, exports to other key markets like the US and the EU dropped. But economists say there's a silver lining.
Vaccination rates in Europe, for instance, have been ramped up fairly quickly in the last couple of months, and hence they are actually beginning to reopen faster. Industrial activity is picking up globally, especially in the major economies like the US and Europe, that is starting to reopen more of their sectors. So that's translated into stronger demand for specialized equipment and machinery, for instance.
Analysts say firms need to diversify their suppliers and import sources to better manage supply chain disruptions. These will help in coping with rising demand for exports.